Hello friends, welcome to the channel Chartered's Counter. I am Surya. I will be teaching you tax, that is your direct tax. Let us start with your first chapter by understanding the meaning of tax. What is tax? Tax is a financial burden imposed by government on a person. What is financial burden? Will you pay tax happily? No, we are not happy to pay tax, so why it is called financial burden? Imposed by government. Which government? Central government and state government on a person. Person includes individual, HUF, Hindu undivided family, company, firm, that is your LLP and partnership firm, association of persons, body of individuals, and your local authority, and lastly artificial judicial person, AJP. So tax is not a voluntary payment. We are not paying voluntarily, and we are not giving donation to government, but an enforced contribution. Enforced means compulsory levy of tax. Compulsory levy of tax. Next is types of tax. Here we have two types of tax. One is direct tax, another is indirect tax. So what is direct tax? The tax which is imposed directly on the taxpayer and paid directly to the government by the person on whom it is imposed. For example, if Mr. X is liable to pay tax of rupees 10,000 to government, instead of X, Y cannot pay the tax of rupees 10,000. It is imposed on X. X should be pay the tax. So it is called direct tax. Here, burden cannot be shifted from taxpayer to the someone else. For example, income tax. Income tax should be paid by the person on whom it is levied. Next is direct tax. If tax is levied directly on the price of goods or services, then it is a direct tax. Burden of tax can be shifted. Means, for example, a manufacturer manufactures a product and supplies it to wholesaler. Wholesaler will supply to retailer. Here, when manufacturer supplies to the wholesaler for a consideration, he will charge tax, and collected tax will be paid to the government. Next, wholesaler will supply the goods to retailer. Wholesaler will collect from the retailer. Next, retailer will supply to the final consumer. Retailer will collect from the final consumer, who is a taxpayer. And next, why taxes are levied? Why taxes are levied? It constitutes basic revenue to the government. If we won't pay tax, how the government will earn? So why it is levy taxes? The collected taxes will be utilized for the expenses of government. For the expenses of government. What are the expenses of government? Like defense, healthcare, infrastructure facility, like construction of roads, bridges, dams, etc. So, who gave power to levy taxes? Constitution of India gives power to levy tax and to collect tax. What is Constitution of India? It is supreme law of India. Gives power to levy and to collect taxes. To whom? To central government and to state government. Next is classification of income under different heads. Classification of income under different heads. First, it is salary income, income from house property, profit and gains from business or profession, capital gains, and other sources. And lastly, we have assessment year and previous year. Assessment year and previous year. It is a period of 12 months from 1st April to 31st March. We will understand what is assessment year and previous year by an example. I have earned a 10 lakh rupees in the year 1920. This is the next year. Here I have earned, and when will I be taxed? When should I pay tax? In the next year. The next year where I will pay tax is my assessment year. The year where I have earned income is my previous year. So friends, in this video we have learned meaning of tax, types of tax, why taxes are levied, who gave power to levy taxes, classification, what is assessment year and previous year. Thank you for watching video.